Uh, The Intelligent Investor by Benjamin Graham is considered one of the most important books on investing, and for good reason. In this book, Graham provides practical advice and fundamental principles that can help navigate the often chaotic world of financial markets. Here's a more detailed overview of the key concepts and lessons from the book. The essence of value investing. Graham lays the foundation for value investing, an approach that focuses on finding stocks that are priced below their intrinsic value. He explains that financial markets are often influenced by emotion, speculation, and short term trends, which can create opportunities for astute investors. The goal is to identify solid companies whose growth potential is not reflected in their current price. By doing so, investors can reduce risk and increase their chances of making a profit. Market. One of Graham's most notable contributions is the concept of Mr. Market, a metaphor for the behavior of stock markets. Mr. Market is an imaginary business partner who offers a price every day to buy or sell stocks. Sometimes he is overly optimistic and offers very high prices. Other times he is pessimistic and offers very low prices. Graham advises investors not to be swayed by these mood swings. Instead, they should focus on rational analysis and make decisions based on the fundamentals of the companies rather than the fleeting emotions of the market. Margin of safety. The concept of margin of safety is central to the book. This means buying stocks at a price significantly below their intrinsic value. Graham argues that this approach protects investors from errors in judgment and market uncertainties. With a margin of safety, even if a company does not perform as expected, the investor is less likely to incur significant losses. Types of investors. Graham categorizes investors into two main types. Defensive investors. These investors seek safety and stable returns. They prefer to invest in strong, established companies with less volatility. Graham recommends a passive approach, focusing on low-cost index funds or stocks of large companies with solid track records. This allows them to minimize risk while benefiting from overall market growth. Enterprising investors. These investors are willing to put in more time and effort to analyze companies and find undervalued opportunities. They may take on more risk, but they must also be more rigorous in their research. Graham emphasizes the importance of having a well-defined strategy and conducting thorough fundamental analysis to identify the best opportunities. Fundamental analysis. Graham teaches the importance of fundamental analysis in evaluating companies. This includes examining financial statements, financial ratios, management quality, and growth prospects. For example, he recommends looking at the price to earnings, PE ratio, the debt to equity ratio, and dividend yields. These tools help investors assess a company's financial health and determine if a stock is undervalued. Importance of discipline and patience. Another key lesson in the book is the importance of discipline and patience. Graham warns that many investors fail because they react impulsively to market fluctuations. Instead, he encourages investors to stick to their strategy and ignore the noise of the market. Patience is essential to allow investments to grow over time. Risk management. Graham also emphasizes the need for effective risk management. Investing is not just about seeking maximum returns, but also about protecting capital. This may involve diversifying a portfolio to avoid excessive dependence on a single company or sector. Good risk management helps mitigate the impact of potential losses. Finally, Graham advocates for a long-term investing approach. He advises investors to focus on long-term outcomes rather than seeking quick gains. By maintaining this perspective, investors can avoid the traps of speculation and build a portfolio that withstands the test of time. Conclusion. The Intelligent Investor is not just a book about investing. It's a guide on how to think and act as an investor. Benjamin Graham teaches us that success in investing relies on understanding, patience, and discipline. Whether you are a novice or an experienced investor, the principles outlined in this book can help you build a solid foundation for your investment decisions. The